General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let me do my work. I ain't do Friday, it's Saturday. And it's getting around that time where everybody finna start talking about what they think gonna happen. And I don't like to listen to nobody talk about what they think gonna happen unless I already did my charts. It don't matter where somebody else think it's gonna go. So this is Friday in the day. We got our target. And we push right back up. Yeah, we got that. Let's do this. I want to get the charts done. Target here. Fair value for buying. Price rally. Interest in the Supreme Court tariff drama and price action align so well. I understand why the technical people don't want to look at the news because you can skip it, but it does help. Look at it like this because this is what it really is. This is week 4. Yeah, it usually looks like this too. It's week 3. No, it don't usually look like this. It usually look better. Hopefully this is a week where you can play spread. Price really not going nowhere. And that's the only way. That's the easiest way to capture these narrow range weeks. Because we really didn't hit no max pain or nothing. Nice, we came and got that high. We can rally from here. This is a good order block now. We swept both sides of it. I will watch this candle body to see if we can target this week high next. Alright, now I can legally watch YouTube videos because I don't want to see nobody forecasting that ain't chart. Still in this range. Tariff drama is over. I'm looking for higher prices. Trump, he trying to retaliate, but he gotta keep it cool. Just cause it's midterms, he can't make everybody angry just yet. This is odd. I mean, it's kind of the same. It's just we didn't have to come back here. So just another wick. I don't like these equal lows though. So unfinished business. It can easily come back here next week. It can easily just use this previous week's range, OTE, retracement, and then push higher on some basic normal stuff. But these lows with this order block is telling me retrace. Especially when you don't got no displacement through here. Nice push up. week, we revisit discount, maybe off Trump drama, gap down to clean those lows up. Then push up. Okay. Yeah, I don't like that unfinished business. Push up looks weak too. Read it somewhere. Institutions don't believe in software. So it's gonna take some big headlines. Maybe Nvidia earnings on the 25th to give us some strong institutional support. Hold on. Just be typing fast. Not correctly fast. It's a difference. Look at how he came right to where I wanted. I just don't like us leaving it like that. If it is good enough with this displacement, we gotta kind of watch it because we got the same thing. This is a key level. That's Monday's game plan. Key level to watch. Last down candle. This should hold if we are truly bullish. This could be like the last straw or the line in the sand or whatever. I need to definitely do power of three charts. I want to focus on the charts. Do the words later. This is just power of three. And tomorrow, we're gonna do the whole top down. Okay, Monday was small. Set the stage. Tuesday took out previous week's low. It's accumulation, manipulation. It's our power of 3 right here. What's interesting though is we did kind of take this high. Let's see how we play with this range. Discount pricing. Hold up. And it came to take out this. We'll put a finish line. Crazy, ugly, choppy, but algorithmic. Alright, let's see this one. Pretty much the same thing. Small range Monday. Took out previous week's low. We didn't take the high. Spot took the high. Retraced. Hold up. And here we had this type 2. And terminus here. The H1 chart make everything look all simple, like, oh man, everybody made money this week. Look at this. SPX. Alright. Get all the charts there. Alright, that's what I really wanted to do. I'll go back into the words. All that stuff. But I wanted to make sure I was caught up because I was busy. Alright, y'all keep it cool. Peace.